Hey everyone, and welcome back to the channel. My name is Brendan, and I hope all of you guys are having a great day no matter where you are from, because the crypto markets are seriously on fire right now. First off, we have Bitcoin outperforming most of the altcoin market after this huge breakout from the bull flag that it just exited. And then we have pretty much every major financial player from the traditional side of things wanting to get their hands on Bitcoin and really crypto as a whole. It doesn't matter if it's Schwab, Fidelity, Citadel, and Ken Griffin from that side. Even Invesco is reapplying for another Bitcoin ETF because BlackRock looks like they might get theirs approved. We're also going to get a little bit more clarity about what the SEC wants to regulate next. So there's a lot to break down in today's video. Now, all that I ask here is that if this does sound interesting, make sure you stick around, hit the like button, hit the subscribe button. That being said, let's go ahead and start off with Bitcoin first, because not only did Bitcoin have this massive breakout in terms of its price, but Bitcoin dominance went soaring through the roof as well, and we'll take a look at that in just a moment. So what we had here was this big bull flag or falling channel, whichever you prefer to call this. We had this massive breakout from this bull flag on Bitcoin, and we can see that as soon as it broke through the 50-day moving average and the top of this resistance channel, Bitcoin's price shot through the roof, and this was the catalyst where Bitcoin really started to move fast. So the day that it broke out here, it did about 5.5%, and today it's already up around 4.5%. So collectively up almost 9% in the last 2 days here. But if we go to the total 2 or even the total 3, to see what's happening in the altcoin markets, while they are rallying, it's maybe 1-2% a day at the most, which just means that Bitcoin's outperforming the markets. And if Bitcoin's outperforming the rest of the crypto market, well then we're going to see dominance look like this. Now, if you're looking at this and saying, why is this a big deal? Because this means that Bitcoin dominance broke out of its 2-year range that it was in from around March or May of 2021 all the way up to the current day. And every single time, Bitcoin dominance had this nice rejection zone up in here, and then it had this nice bottoming zone right down in here. So with Bitcoin dominance breaking up above this, this marks the highest point that Bitcoin dominance has been in almost, or really in over 2 years now. So the last time that Bitcoin dominance saw this level was all the way back in April of 2021 at 51, almost 51.5%. So it's a really, really significant number, and it's something to keep your eye out on. Now, if you're thinking about trading alts and doing all this other stuff, this is another thing to take into account, because again, Bitcoin's outperforming just about every altcoin. And with this happening and all this other financial and institutional money news that's coming from the traditional finance side of things, we got more news. So Schwab and Fidelity are launching their crypto exchange called EDX. Now, this is going to be a little bit different from what we're used to. So basically, this has the backing of Schwab, it has the backing of Fidelity, and it has the backing of Ken Griffin's Citadel Securities. They're going to allow Bitcoin, Ethereum, Litecoin, and Bitcoin Cash trading. So pretty much all the old school classic cryptocurrencies that have been listed before as being pretty safe from being labeled as securities. There's some talks before about pretty much how all 4 of these are about as close as to exempt from being a security as possible. Whereas a lot of altcoins that are newer are being investigated as potential security threats and stuff like that. The difference here also is that exchanges like Binance and Coinbase are custodial exchanges, which mean they hold your cryptocurrency. But EDX will not be custodials, or really they won't be the custodians. So it says here that EDX is a non-custodial exchange, meaning it does not hold customers' crypto, and instead it uses third-party custodians, which is actually pretty interesting. You'd expect someone of that size to probably only trust themselves, but it makes sense. This isn't really their forte in the space yet, and maybe that changes in the future. I am a little bit curious as to who these custodians are, because a lot of the big players like to actually run with Coinbase, but it seems like in light of what is happening with Coinbase right now, they are potentially not. So it looks like you might actually just have to be your own self-custodian here, but regardless, the point is they're not going to be the ones holding your money, which some people will probably find even more bullish, because there's a lot of people out there who don't trust these sources. Now, what about Invesco? Well, Invesco, for those of you who don't know, another big name in the space. We're talking about $1.4 trillion in assets under management, and they just reapplied for their spot Bitcoin ETF, or exchange traded fund. And I believe the last time they did this was when they got rejected. It was either last year or in 2021. So in light of all this stuff, they're seeing BlackRock apply, and the talks are, from the looks of it, BlackRock has a really good chance at getting this Bitcoin ETF approved, which would be a massive deal. And so Invesco is saying, hey, if they can get this approved, then why can't we? And I think BlackRock has a better chance than Invesco, as the government hasn't been too fond to letting these things get through. But once the first one gets through, I think that's going to mark a big mark for the crypto markets. And in our final bit of news here, we have stablecoins and DeFi, which are likely to be the SEC's next target. Now, I had to include this because this was just too funny for me. They say this like DeFi hasn't been the SEC's main target for the last almost 2 years now. The SEC has made it clear that they are cracking down, or targeting. I think targeting is a better word. They're targeting the DeFi markets, and they had a little bit of headlights on stablecoins, so I think that's fair. But to say that they're likely going to be the next targets is a little bit funny, because DeFi has been the target for almost 2 years now. So to say that it's going to be like this next new oncoming thing, it's a little bit funny to me. So if you see articles like this circulating around, DeFi has been in the SEC sites for a while now. Maybe they're going to ramp it up. Maybe that's what they're trying to say here. But if you see articles like this, just remember that this really isn't anything new, and we're gonna get crazy headlines. But despite all this happening, despite headlines like this being like, oh, you got to be scared for stablecoins, you got to be scared for DeFi, you got to be scared for the crypto markets. There's a lot of articles saying, hey, you need to be scared or this bad thing's gonna happen. But then you go and you look at this and you're like, oh, well, why should I really be fundamentally scared here if Invesco's looking for a Bitcoin ETF, BlackRock's looking for a Bitcoin ETF, Schwab and Fidelity and Citadel are all plugging their directly into the crypto markets. If all of the largest financial players are choosing now to enter in, should I really be scared about the fundamentals? And I'll kind of leave it at that. Me personally, I think the fundamental news far outweighs the bearish news that we're seeing here. Yeah, there is stuff to be careful about. Not every crypto is going to make it, but the fundamental side is starting to look pretty nice, and I like this bullish breakout of Bitcoin, especially with Bitcoin dominance rising, because we know in the past that Bitcoin dominance will rip and it will soar, and that leads us into the next alt season and typically into the next market cycle as Bitcoin dominance increases before a halving event. So that's going to round us up for today's video, everyone. I hope you all did enjoy. And again, if you did, all that I ask is that you hit the like button, you hit the subscribe button, you drop a comment if you have a question, and I hope to see all of you in Friday's video.